Good day and welcome to Triple A Professional Institute. I'll be running you through financial accounting, financial reporting, as well as corporate reporting. If you are not subscribed to this video, please do so. It's important that you do so to keep us also serving you better. Today, we'll be looking at the overview of accounting, the conceptual and the regulatory framework. In this class now we'll be looking at the overview of accounting, and the next class we'll look at the regulatory and the conceptual framework. Every business exists, and then to make profit. Making profit, you need an accountant to help you have. There are exchange of money, exchange of substance, exchange of value. You need an accountant to help you out. So quickly, definition of accounting as it were. Accounting is the systematic way of identifying, recording, classifying, summarizing, preparing, presenting, financial information for users as it were. I call it systemic because it must really be systemic, and then you must be able to gather the required information. That's what we call the record keeping. Then we have after you have gathered the record, you must be able to classify them into appropriate headings and ledgers. And then from there, that is where you bring out the information you need to prepare the financial statement for the users. So that is that for that. And so we have difference between bookkeeping and accounting. Bookkeeping, as it were, is all about gathering all of the records, putting the records in place. That's that for bookkeeping. While accounting will need the record that a bookkeeper kept in order to produce what we call a financial report or a financial statement as it was. So that's just the major differences between bookkeeping and accounting. You might be asked, what is the differences? And that's why I'm giving this explanation. Bookkeeping is all about keeping the records, whereas accounting is all about making use of the records that have been kept. Now, the users of and the information need of accounting information. Every report that an accountant prepare is known as financial information, and there are users of this financial information. So we have the users as well as their needs in usage. Now we have different kind of users. We can group them into primary and then secondary users. The primary users are classified as the owners of the business, and then the secondary users, they are the external users that are not maybe in the business as it were. Pause. So users, like I said, can be classified into the internal and the external users. Internal users, basically they are the shareholders, the managers in the business. Shareholders information need basically to know the performance and the financial position of their entity. Owners of the business, like I said, we have the sole proprietorship business, we have partnership business, we have limited liability companies that are also in business. All of these put together, they also have needs. They need to know what is the content of the financial information that have been provided, and the essence is to know the So that, like I was saying, those users can be categorized into internal and external. Then under the internal you have the shareholders and management. That's it. And then these ones, you need the financial information, and so that they can as well know the performance of their business. As well know the financial position, that is their net asset as at the period when that information is provided. Okay, and so like I said, that's what they use it for. Shareholders, the management, that's 1 and 2 now. Carry 1 and 2 here. Management, they are the managers of the business, so you need to know what they have even done, and then they need to know what is the position of the assets that have been committed into their hands. That's that for that. So the external users now, we have the lenders. The lenders, the need is for them to know the gearing level or the debt capability uh, of the entity, for them to know if they can still secure loans